This is our 60-minute breakout E-mini S&P strategy, holding long over the weekend. I actually like that trade. The market's kind of made this bottoming formation, and with the potential for another Fed rate hike and who knows what else, talk of the plunge protection team buying on Friday and the VIX just dropping from about 53, 54 down to 41 area. I like this trade. Let's look at the latest performance summary for this. It's kind of nerve-wracking, I know, to hold positions over the weekend, but what do the numbers say? This is a strategy as it is, and so 63, 462, 50. This is with $25 round turn slippage and commission, $118 average trade profit, $7,025 drawdown on a closed trade basis. And again, this is with slippage and commission. And so these are the trades that's kind of, had this a tough trading period right here, trying to buy these breakouts that just get foiled. There was 1, 2, 3 losers, and then you had a winner, and then a loser, and then a loser, and then this trade right here. So the potential for, in my opinion, for a gap up is possible. This is what happened. Yesterday looked almost like last Friday. You have this, especially on the intraday chart. This is a 24-hour chart. So you had this opening range, wide range, and then the afternoon was a wider range with this big sharp rally at the end of the day. Last Friday was the same thing. And then today, and I think that could be a trend that takes place. Last Friday it happened, it gapped down. The market gapped down pretty big, and so there is a risk of holding positions overnight. But even with all that, this is the setup that's testing this back to 2013 with holding positions overnight. You see that in 2018 it went through this drawdown, and right now it's going through this drawdown. So this is normal because of this pullback, this long-only strategy. So what are some of the modifications that we could make? Question, should we hold this over the weekend? And so one of the things I've done is I've added the exit Friday on the close. So if day of the week, I didn't add this to the current results, but I'm going to add it. So if day of week of date is equal to 5 and time is equal to 1500, then sell next bar at the market. And so I'm actually going to make it, okay, so yeah, that's what I'm going to do is I'm going to make it, if time is less than 1500, then sell next bar at the market. And in the 60-minute breakout code, I'm going to say if time is less than 1600. So it won't take any trades. This is the condition I'm going to add to this ELD right here that's proprietary. And so I'm going to add that, and so it won't take any trades after 1600 on any day. So there'll be no trades on any day where it exits, where it enters trades after the 1600 bar, and it'll exit on the 1600 bar if there is a trade on Friday. So I'm going to update the ELD, and I'm first going to show you what the results are like if it doesn't take trades at 1600. So I'm going to change that, and then I'm going to show you the results. So I said and time is less than 1600 to the code, and here are the results. The average trade profit goes up by $6, and you don't see that end trade right there at the end of the day. And then it still holds positions overnight. It just won't enter new trades after if time is less than if time is greater than 1600. So when you say if time is less than 1600, it requires that the time be less than 1600. So from 0 forward, right here, from 1 a.m. until 1500, it'll enter trades. And so these are the results. The average trade profit goes up. This number goes down a little bit. We had the same drawdown and less total net profit. You get $6,000 total less profit when you don't enter trades during that time period. And so you have to decide whether you want to do that. And then what if we say now, we're going to turn on this. This is a separate strategy that's just exits. And I'm going to insert this strategy, and I'm going to show you the results of this strategy. And so you just sell the next bar at the market, and we'll see the results. So I'm going to add this setup. So you see you can insert this strategy, and you can turn the status on, and then I'm going to show you what the results are. So the results, you reduce the drawdown from 7,000 to 6,250. You don't have any overnight trades, and the largest losing trade is 1,025, and average trade profit goes down a little bit. And so you could do this if it makes you feel more comfortable. I don't know how to affect the portfolio. This is an optional update that we can add, and I'll add some parameters to the original code so that you can do this if you would like on your side, and maybe I'll be able to add it to the calculator. There's so many different combinations of so many different strategies. If we could literally have 1,000 different setups in the Excel portfolio calculator, it would be very challenging to manage it all. So that is what we're looking at today. I've got one more modification. I'm going to pause the video and add the code, and then I'll come right back. I want to show you the test back to 1997 on the original strategy as well. Before we add the other filter I'm going to add is a bonds filter, and so taking a look at this, so it works pretty well going back to 2009, and with the VIX filter that it currently has, we can only test back to 2003 because intraday data for the VIX only goes back to 2003 in TradeStation. And so nice results. The largest losing trade is 1887.50, which is bigger than the stop loss. So during the time the market is closed, if you hold a position, sometimes your loss can be bigger. So what are the results if you close this on Fridays? I'm going to add it back with the two new filters that I showed you, that Friday, the exit Friday on close, and the time being less than 1600 for new entries. So the drawdown goes down, the largest losing trade goes down, so even though you hold it overnight, since you're not holding it over the weekend, going back to 2003, again we have the data set to 1997, but the VIX intraday data, which it now uses, only goes back to 2003. So back to 2003, holding it overnight but not over the weekend, your worst case losing trade is the stop loss amount, 1,025 with slippage and commission. Your average trade profit goes down a little bit, so we're going to look at those results back to as much data as we have now. And so I'm going to add that other filter, that third filter that I'm telling you about, and then we're going to take a look at it, the results once again. So here are the results once again that we just talked about with our two filters. And I'm going to add one more filter, and you see I've added bonds down here, the daily chart of the bonds, and you have to have real-time data or you may not mix symbols of different delays. So this is an optional update for this strategy. It's not part of the portfolio, but it's an optional upgrade. It'll be a separate workspace, separate easy language, and you could implement it instead, or you could include both of these. But this is a 60-minute breakout. Potential adjustments for people that want to trade less. I prefer to have more raw strategies, but certainly if you want to reduce your risk over the weekend, you can justify it with doing this type of research. But this is requiring the trend of the bonds to be up. So when bonds are up, we say the trend of stocks is up. And so what happens here? Let's take a look. I'm going to update the results, and you'll see the changes. 55 average trade profit, 331 net profit as a percentage of drawdown, 45,000. And so the average trade profit goes way up, the drawdown goes down, the net profit as a percentage goes up, your total net profit goes down because you're trading less, you're more selective. Here is the equity curve. So fewer trades, still from that same time frame, 2011 goes up. And now I'm going to look at this result with just the bonds, and we're going to remove our other two filters. So I'm removing the time is less than 1600. Time is less than 1600. Obviously, the trend in bonds is up, so it's still going to take long trades this week. It wouldn't have affected the trades this week. So time is less than 1600. It trades more, and now I'm going to turn the exit Friday at the close off. So these are the results with our original strategy with just the bond filter. So you get $75 average trade profit, 11,425 drawdown. You get that largest losing trade of 1887. Net profit as a percentage of drawdown is 416. Now we're going to look at it once again, go back to our completely original strategy without the bond trend filter. And we're going to take a look at the results here. The 75 average trade profit, 416 net percentage of profit as a drawdown, 47 total net profit. So your total net profit it goes up by 11,000. Your drawdown goes up, your worst case losing trade goes up, your average trade profit goes down. So these are some of the things you can take a look at. Also, you have to keep in mind though that if you want to test this back to 2/27/2009 to see, you can see what it's done since that time, then the worst case drawdown is decreased. So if you want to look at more recent data, you can do that. Let's look at it once again with the bond filter. And you can look at this drawdown curve, how it affects that drawdown curve. So here it is. 2009 is right here. And so since this time frame, the drawdown is pretty low. You see this drawdown period right here in 2014. And if you just look from this time, 2011, let's just look at what it does since 9. Let's just look at what it does since, yeah, this time period right here, 8/1/2011. I've got the settings on local time. So since 2011, this strategy looks really good. Low drawdown, high average trade profit. If you're looking at the most relevant data going back about 9 years, worst case drawdown is on 9/3/2015, which is right there. And so you could see the cyclical nature of the drawdown of this strategy. And let's look at it. This is with the bond filter again. This is with the bond filter. Take out the bond filter. I'm going to take the bond filter out. See what the difference is. 1098, 121. So it doesn't make that much of a difference. $6 average trade profit. Not much difference there. So with or without the bond filter, this is just the original strategy. This is the current strategy that we're using. We updated it last weekend, and since 2011, this is a really good strategy. And you're always going back and looking at, should I be doing what I'm doing? Is this the best approach? And since 2011, this is a pretty good approach. In 2018, some volatility in here wasn't the best approach. The Fed was tightening. Fed tightened, and you notice that you don't see that drawdown in 2018 because those trades get filtered. And what this would do is if the bond filter, if the Fed tightened, you would assume that equities would go down, and you don't want to take these long trades. And so this drawdown is not as severe in 2018. Let's take a look at that again. I'm going to add the bond filter back, and so you can go back and look at it in 2018. So in 2018, it's just not there. That drawdown goes away, and it could potentially get us from taking long trades if the Fed tightened. The theory is as long as the Fed is easing, the trend is up. I think there'll be a point in the future though where the Fed can no longer ease, and that could cause equities to go down. So that would be a different story altogether. And so that's the update I'm going to make it. One more thing I just thought of. What if we just use the trend of the ES? Let's change this to ES. It's a daily chart, ES. This may not work. So it works great actually. So what do you know? What if we add the ES and the bonds? I'm going to insert the bonds. So I'm developing this in real time on video, so we can really really improve this strategy if we want. Back to 2011. It actually didn't improve it. Let's look here. It's just the bonds. With just the bonds, the strategy is actually, what is it? Let's look at the results. Yeah, it's actually better. Well, I just noticed the drawdown drop. That's why I got excited, because the drawdown drop is always exciting. The average trade profit and all these others, they're not, I'm going to look at the trend now of both the bonds and the ES. So looking at data 3 and data 4 trends. So you get quite a bit of filtering going on. You really reduce your trades. You really reduce your net profit. It's still a nice strategy, but just too filtered for me. It's just too many rules. I don't like having that many rules. And so what happens if we add the other rules? And time is less than 1600. And then if we turn on exit Friday on close, I'm going to look at that too. So if time is less than 1600, you get these. And then I'm going to format the strategy. I'm going to turn on Friday exit on close. So there we go. In my opinion, we filtered ourselves into too much filtering. I prefer the raw strategy, but I'm going to make a modification of this strategy, and I'll show you what it looks like, and you can make these adjustments on your side if you want. This is not part of the portfolio. This is some optional updates that you can use if you want to reduce your risk over the weekend, or if you want to add these additional filters. I'm going to pause the video. I'm going to come back with the modification and show you how it works. So here's the base strategy once again with slippage and commission with no extra rules. But I've modified this so you can format the strategy. I'm going to show you that. So you format the strategy and you take a look at all the inputs. I've added some inputs, and so you can set the time filter to true. It'll exit at 1600. You can set the ES filter to true, and it'll make sure the trend of the E-mini S&P daily bars are up on data 3. The bond filter must be up, data 4. There is a VIX 60-minute, which is data 2. You don't see that in the chart behind me. Use VIX filter. This is data 2, where you're looking at 60-minute bars. 50, it must be less than 50. Yesterday it was interesting because the VIX was above 50, and then it dropped below 50 and took that trade at the end of the day. So, interesting. We'll see how that plays out on Monday. And so I'm going to send the ELD in this workspace update to you. A couple more things I'm going to show you here real quick. Use Friday exit time. If you set that to true, if the time is equal to 1500, then it'll sell the next bar at the market, which is the open of the 60-minute bar. Stop loss and profit target are the same. So in this basic form, it's the same strategy. If you want to use any of the filters that we've talked about, you simply set the time, like the time filter, you'd set it to true. ES filter, we'd set it to true. The bond trend filter, set it to true. The current version for the VIX filter on data 2 is already true, so that's the default. And so this is a modified strategy if you want to use it. I'm not implementing this in the portfolio, but it's a modified, it's an option. Part of the all strategy access that you have for the all strategy access, and I have a separate workspace for strategies that are not in the portfolio that have these additional filters, and that I'm going to be updating as we go forward in time. And that includes the adaptive moving average that I updated you with earlier in the week. I'm going to add it. I'm going to actually save this workspace as something else. I'm going to show you that right. So in order to save on workspaces, I don't have a workspace for each strategy. I've got these optional strategies. Adaptive moving average was an optional update that I sent earlier in the week, and I've included it in this workspace, all strategy access optional. So you'll have all strategy access 1 through 5. You'll have all strategy access old, and you'll have all strategy access optional. And these may be added in the future to the portfolio. You have access to them now, and I'll probably be adding Cobra bonds to this as well this weekend, so you'll have access to the Cobra bonds optional strategy that I talked about, as well as a gold EVP2. So multiple optional updates that you can take a look at. And if this is too much for you, don't worry about it. If you just want to trade one of the portfolios, just worry about what's in the portfolios. Don't even worry about the all strategy access old or the all strategy access optional if this is too much. These are just optional updates as part of all strategy access.